So the final part of the Incomplete Records lecture is dealing with markups and margins. This is a technique that you will also come across when studying management accounting. So you need to think of dealing with markups and margins. The best approach is to actually set up a cost structure of the sales of the organisation from the information given in a question. The cost structure is the relationship between the selling price of the goods, their cost, and the gross profit earned in percentage terms. So if we actually have a look at a short example below, so we have an item sold for £150. It originally cost £100, so we need to set up a cost structure for this particular information. So as I said, it's the relationship between the sales figure, in this case it's sold for £150, the cost of sales, which was £100, which then gives us a gross profit of £50. So that would be our initial cost structure. In order to deal with markups and margins, we need to convert this to percentages. Now there's two different methods of doing this. The first one is that we could look at the cost of sales as being our 100%. So if we do that first, so if we say that cost of sales is 100%, then our structure would be that our gross profit is 50 of 100 times 100%. So that's going to give me a 50% gross profit margin. And then to get to our sales, so if we work backwards up the calculation, so 50 plus 100, so sales must have been 150%. So now we can use that information if necessary going forward. So that's dealing with a cost of sales. So we've said to be here that we have a gross profit percentage of 50% on cost of sales. So now we can look at it an alternative way, and instead of using 100% as being the cost figure, we can actually use 100% as being the revenue figure. So if we quickly redraw our cost structure, so this time we're going to make, as I said, our sales figure equal 100%. So now in order to calculate our cost percentage, so we have 100 of a possible 150 in terms of pounds as a percentage, and that would be 2/3 or 66 2/3%. And therefore my gross profit would be £50 of 150 times 100%. So that would give me a 33 1/3%. Or we could have calculated it as 100% minus the 66 2/3. And this is said to be a gross profit percentage of 33 1/3% on sales. So they're slightly different from the same information. So the difference between a markup and a margin, so if the cost of sales is 100%, then this is known as a markup on cost. Therefore, in our previous example above, the sale would be described as having a markup on cost of 50%. If it's the revenue that is 100%, then this is known as a sales margin, And again, in the previous example above, the sales would be described as having a gross profit margin of 33.33%. So markup is on cost and a margin is on sales. So let's have a look again at this little question that we've got below. So we need to calculate the cost of sales of goods that were sold for £1,200 and they had a gross profit margin of 25%. So we need to again set up our cost structure. So in terms of pounds, so we've got sales costs to give us a gross profit. And in pounds term, we know that they were sold for £1,200. And in terms of percentages, we know that we have a gross profit margin. So as it's margin, then 100% is the sales figure and our gross profit is 25%. So by default, it must mean that our costs are 75%. So now we need to be able to calculate our missing figure for cost and or gross profit. So our cost of sales is equal to 75% of our revenue. So 75% of the 100%. So I want 75% of £1,200, and that's going to give me a £900 cost. So our profit on this transaction would be 300. So we can use our markup and margin information in order to reconstruct a short trading account. So developing this further, we can then use this idea of markup and margins in incomplete records. And it will assist us in helping to find missing figures for revenue or for cost of goods sold. But it does mean that you do need to practice the activity. So let's have a look at a short example. So a business has purchases of £18,000. We've got opening and closing inventory of 2,000 and 4,000 respectively, and a gross profit margin is always 25%. So we are going to have to calculate the revenues for the period. So again, firstly, set up your cost structure. So our revenue or sales costs, which will then give us a gross profit. So we know here that we have a profit margin of 25%, so our gross profit is 25%. It's a margin, so the revenue is 100%, and that leaves us with the costs being equal to 75%. So our second step is to establish our cost of sales, because we've got a bit more information in this question compared to the previous one. So remember, cost of sales is equal to your opening inventory, which in this case is given as 2,000. We then need to add in purchases, which we're given in this question as 18,000. So available to sell items is 20,000, and then deduct from that the closing inventory, which again we're given in the question as 4,000. So our cost of sales would be £16,000. So remember, this is cost of sales. So now we can go back to our cost structure and determine what our revenue figure would be. So we know that our cost of sales is 16,000, so we can slot that in as being equal to 75%. We're after the revenue figure, so the easiest way to think about this is divide by what you have and multiply by what you want. So we have 16,000, and that represents 75%, and we need 100%, we need the sales figure. So calculating that through would give us a revenue figure of 21,333, which we can then slot back into our cost structure, and then that would help enable us to determine a gross profit figure of being 5,333 if required. So that's looking at how we can actually use this cost structure together with the information to compile an incomplete record. So how do we approach a question? So incomplete record problems can at first appear to be a little bit daunting. Sometimes they can look to be a little bit lengthy. However, with practice, you should be able to get used to doing the approach using the techniques that we've gone through over this video and the previous two. So remember the techniques that you have. So you've got use the accounting equation. So our assets equals capital plus liability. You may have to reconstruct a cash and or bank account. You may need to use the trade receivables, trade payables account, so sales ledger control, purchase ledger control. And then finally you may need to use the markup and margin. So with any kind of question, it's best to get into the habit of making sure that you've got a clear and logical approach and that you can follow some kind of process. So I've given you a sort of step-by-step just to give you a helping hand. So first of all, read through the example, get a feel for the information that you've been given. You may at this point want to sort of highlight the main information that you've got, try and pick out things like your sales, your purchases, any kind of expenses that are going through. Is there any entries going through from the bank? And then secondly, decide whether or not you need to reconstruct the bank and or the cash account. In a lot of questions you'll be given a summary of the bank transactions. No need to include this in your answer. Thirdly, set up a trade receivables, trade payables account, so sales ledger control, purchase ledger control. Put in your opening balances and put in your closing balances, making sure that you've got them on the correct side in both accounts. Next, set up a cost structure in percentage terms if you're given any kind of information dealing with markups and margins. And then fifth step, set up your workings papers. So head up a sheet of paper for your statement of profit and loss, set up another one for a statement of financial position, and then you'll probably need a third sheet that looks at all of your workings. Then carefully work through the example, entering each figure either into the control accounts or onto the financial statements as appropriate. Take special care with your cash and bank transactions. The summary information is only one side of the double entry, the other side isn't given in clarity. And then finally, when you've entered as many figures as you can into all of your various different workings, your control accounts, your financial statements, etc., have a look to see what you've got and see whether you can actually determine any of the missing figures. So we will go over questions in class this week that looks at using these techniques to reconstruct a set of accounts or workings dealing with incomplete records.